Alright, what's going on? Premium. Another video for you guys. This is going to be talking about how I choose which gaps to take for certain setups. So, as you guys know, I'm always entering off of IFVGs. That's a non-negotiable about me. I'm always going to enter off an IFVG. But which IFVG? Well, if you go on my trade recap from the other day, or my trading journal, let's talk about this 15-second inversion that I got break-evened on. I should have honestly won on, but I was just late to the party. That a lot of people lost on because they took the 1 minute. And a lot of people were like, why didn't I take the 1 minute? Why didn't I wait? So let's talk about it, right? So obviously the 15-second is the 15-second, 30-second, 1 minute, and 2 minute are always the gaps I'm taking. I'm always going to take an inverse fair value gap, and that's my entry model. And the way I see it is, I want to take a gap that gets me in the move in as quick and as good of a place as possible. For example, let's say this is the 15-second chart. Obviously the inverse is right here. You see the gap, you see the close, yeah. The reason why I took the 15-second is because let's look at the 30. There is none. Let's look at the 1 minute. The 1 minute had just formed when we had already taken this 15-second. So instead of getting in right here and taking profits up at this high with the 15-second, if I were to take the 1 minute, I would instead be getting up here, where if I put my stop loss the same as where I had it at the for the 15-second, it's almost double. I need to go for a way more unrealistic target, and I'll talk more about why the 1 minute was fucking shit anyway, but the 15-second gets me in the trade. It's valid because it's coming up out of our liquidity pool. It's London low and a 30-minute gap, which I'll show you guys right here. A 30-minute gap while also sweeping this intermediate low. Fuck, god damn it, this fucking trade was so good. So, and was there an internal SMT? I don't even know. Yeah, there was. Fuck, this trade was so good. I can't believe I got break even on this shit. Anyway, look at this. So, what am I looking at for an inverse? I want a momentum candle close. I want this, all right? If, let's see. This is what this candle looked like instead, and we inversed off this. It's not as high probability. So when I'm trying to get an inverse, I want a momentum candle close, and I want that V shape that I always tell you guys about. Because what does that mean for me if we have a V shape? If we have a gap here, and I want to see longs out of this gap, then I want to see us come down and immediately grab orders from this gap and then come back up in a V, obviously. Because that means price said, yeah, we're going to come here. Okay, we respect this. We want to continue the order flow to that upside, and we're going to take it. And same thing if we were coming up. Okay, there's a bearish fair value gap. We're going to take those orders, and we're going to respect that and continue bearish order flow. That's how it should work. So think of it as like a correction. Let's say we have a move right here, right? Where we are in a bullish uptrend, all right? We're chopping, we're making an uptrend here. And then we have a fair value gap down here. What I want to see is I want to see price retrace, hit that fair value gap, and then say, yes, we're going to grab orders from here, and we're going to respect you and continue to come up. And then when we respect it, get a lower time frame inversion to confirm that move. That's why I always talk about top-down analysis. I say, okay, I want to see the higher time frames get respected, and I want to see the lower time frames get inversed with my entry model. My entry model being IFVGs and internal SMTs, right? So very money. The reason why this 1 minute didn't work, besides the placement, this is huge. This is huge, all right? So listen up. A lot of people took this 1 minute in my Discord and got dicked by it. Let's talk about why. Obviously, as you guys know, I like to go break even pretty quickly because I like to ride momentum on these trades. Where do I go break even? The high, the low, the most recent high. So right here on this 1 minute is where I'd go break even, obviously, right? That's pretty obvious. It's the first high. It's a pretty nice pool of liquidity. If we go on the 15-second here and mark out that same high, just to show you again how much better this 15-second is, the 15 was down here, could have targeted that with a stop below the low, and when 1-to-1 it would have fucking hit just about. Or if I targeted here and then put it like back at the liquidity pool, which I would probably do here, probably put it at the fair value gap, go 1-to-1 about, like, this banks instantly, yet the 1 minute failed. Why? Because where is there a high on the 15 second? A swing high. There isn't one except for these, which is the same as the 1 minute time frame. The difference, before the 1 minute closed, it already took the high, which means it's invalid. All right, because now my break even spot is gone. It could be a plus trade. You could get the reaction, get the V shape, everything like that. But if you take that first high, your break-even spot is gone, and now you're running the risk of it getting reversed on you, especially when, guess what else happened? We formed an SMT when we took it. So immediately, you're fucking taking the reverse of this trade, right? So that's how you get fucked, because you enter the trade where your break-even point has already been hit before the close even happens, and you're going against an internal SMT that's going to fail you every time. So what do I want? I want a gap that is great placement, very close to where the liquidity sweep or the fair value gap respect occurred. Like I said, the 1 minute is up here, the 15 second is down here. That is a 10-point difference, which was half of my take profit. That's a huge difference, right? Half of your take profit being split in, the move is pretty fucking significant. That means that you could at least go break even. So the placement of the gap and, what gets me in at the best time is always going to be my thing. Personally, I think the 30 second and the 1 minute are the most reliable. So I usually want to take 30 seconds or 1 minute over 15 seconds. So if there was a 30 second, like right here, around the same spot where the 15 was, I'd probably wait for it just for extra confirmation. But just because I think the 30 seconds is more reliable than the 15 can fake out sometimes. But overall, I'm looking at, okay, where in terms of the, fuck is it called? I'm fucking stupid. In terms of the reaction is the gap. Now, many of you may ask, okay, then why didn't you take this 15 second? This 15 second is beautiful. Like, it's right off the reaction. It's we got a huge momentum candle close through it, everything like that. And that's a really good question, honestly, it is. The reason why is because we have another one right above it. And the thing with this is, let's say we get this move coming out of the gap, right? This is the open, so there's not many points that we've gone. So let's go from the gap to the fair value gap that we've inversed. 3 points. What do I always say? I want to see us explode out of that gap. Let me elaborate. So if we hit this 4-hour bullish fair value gap and I want to get longs, and we get an inverse, and the gap is right here, and we close right here, am I going to take it? No, I'm not. Why am I not going to take it? The reason I'm not going to take it is because we haven't inversed back up out of the fair value gap. So I don't know if we're respecting it or not. I want to take a trade only if we come down, respect it, and then inverse back out of the gap. And same thing for shorts, obviously. What the fuck did I just do? Same thing for shorts. Let's say we bring this up here. I want to see price come in and then react, inverse a gap, and close back outside the gap, and then continue, because that shows that we have fully respected and are done interacting with that gap. If we inverse while still inside of the gap, like right here, what we could do? We could manipulate back up, make a new high, maybe make an SMT, and then come down. So you're just going to get caught up in a lot of fucking bullshit. So that's my big thing. The reason why I didn't like this smaller gap is because we were only 3 points away from the gap with this inverse. So is that really exploding back out of the gap? No, because you could easily go, okay, we tapped, little reaction, calm little reaction. Now let's make another move, take out this low, and then go. Whereas, compare that to this gap, where we come up fully displaced with a huge candle, and instead of 3 points, now we're looking at about 19 points, where that's a perfect range where we're not all the way back up at these fucking highs for a 40-point move, but we're not right next to the gap either. We have perfectly exploded, reacted, V-shaped off of it, and momentum closed back above the gap. Rather than right here, rather than right here, and rather than up here, we are getting the perfect entry. Because if you think about it, let me split this up, right? And this is day one shit. We've made videos on this. This is premium. This is discount, obviously. And you want a long in discount, and you want a short in premium, right? All right, hopefully I haven't lost you yet. Let's get the leg of this move. All right? Here's the leg of the move. So right here is the 50%. I want a long as close to underneath this as possible. So right here with this 30-second, we're right at that 50% level, all right? We're actually displacing above the 50%, which is actually pretty good. So we're right at that 50% level. Perfect, right? Now let's go to the 1 minute. Where did the 1 minute close? At above 0.786 in the 80th percentile. This is literally the ideal place for shorts. Okay, the ideal place for shorts. So, to summarize for you guys, how do I know what gap I'm going to take? Let's just reiterate everything that I've said. I want to see a beautiful V shape and a momentum close away from the gap or the liquidity sweep that we've respected on the higher time frame. Away from it. Not a close inside of it. Not a close, right here. I want to see momentum coming out of that bitch. I want to see us longing in the, I want to see a close and a gap that is in the discount for longs and in the premium for shorts. All right? And, let's see here. So, I want to be V-shape, momentum close, away from the gap, in discount, or in premium for shorts. That's what I'm looking at every single time. And I want to get the gap that gets me in efficiently. All right? I'm not going to, if there was a 5 minute that formed right here, I'm not going to wait for the 5 minute. All right? I want to get in and get out at the most instant possible time, because if we're hitting a 4-hour gap and getting a liquidity sweep and an internal SMT and a 30-second gap with an inverse with great momentum, I'm not going to say, well, let's hold on here. Let's wait for the 5 minute to close. Like, no, I want to get in that move because we're reacting right now on all time frames. That's why I do top-down analysis, because I want to see all time frames coming together at one point. Those higher time frame gaps or liquidity sweeps are telling me, okay, this is the direction that we're looking to go in for the next couple minutes. And then those lower second 15, 30, 1 minute are telling me, okay, we're going up now, or we're going down now. This is where you enter, all right? So there's direction and there's entry. Those lower time frames are the entry, the higher time frames are the direction. So I'm always going to look for those gaps, 15, 30, 1 minute, 2 minute, that are in the range in discount or in premium. Momentum closes, great reactions, V-shaped reactions, closing away from the fucking thing that we're reacting off of, but still in discount for longs. And, of course, that last thing, aren't taking out internal highs. Because where am I always targeting? I'm always targeting like a 1-to-1 with internal highs, or with an external draw, or an hour, or an unfilled fair value gap, something like that. Imagine if we had an unfilled fair value gap right here, like a 5 minute unfilled fair value gap. Right here. Would you still take this 15-second after it inversed, right after it wicked a 5 minute? No, because then there comes a huge possibility of you hitting the 5 minute and then wicking out and going to the downside. Have I taken trades in the past where I've neglected, like a 5 minute or a higher time frame gap? Sometimes, because I will, because the draw will be super obvious to the upside, or I really like the reaction, or we have an external and internal SMT and it's just an A+ setup, and my bias is in that direction. So yes, in some cases I will neglect that, but for the most part you don't want to be longing into a liquidity pool that we've already tapped before the close. Like if we tap the 5 minute before closing, then I'd be pretty against it. But if we closed right here and the 5 minute was right here, I could just go break even at the 5 minute. So if we do get a reaction, I save myself from a loss. All right, so that's how I manage what inverses to take, when to take them, what time frame, etc.